Good morning, good evening, and good afternoon, everybody. Hope everybody is having a fantastic day. Today, it is time for high probability short term profits. I know that you are excited for this because I'm excited for this. I love listening to Mike talk about this and how excited he gets with everything. Today, we're going to go through a quick market review. Then, we're going to talk about some news updates going on. Then, we're going to talk about last show's trade. And then, we're also going to do a live trade. Then at the very end, we're going to take some of your questions and we're going to answer them. We're going to go over some of your stocks, some of your tickers, everything like that. But y'all have listened to me yap enough. Let's get to the meat and potatoes. Mr. Mike Wade, come on in. How you doing, sir?
Good. This sack of meat and potatoes is doing well. How you doing, Ryan?
I'm doing good. Freshly back from a cruise vacation to the Bahamas.
Ooh, how was it?
It was good. As you can see, I got fully a brand new burn that I could add onto my the top of my extremely translucent complexion.
It looks good on you, man.
Yeah, thanks. Appreciate it.
All right. Well, we got some stuff going on here in the markets, Ryan. I'm going to start with this, what we call a heat map. I got this from a site called FinViz. You can get these kind of heat maps everywhere pretty much. But, you know, Ryan, about a month ago, we were looking at this heat map, and what is red, big in red. By the way, the complexion of the color has everything to do with the direction for these particular stocks. These are all the S&P 500 stocks, 500 stocks on this graphic. And you can notice that the big names, Microsoft, NVIDIA, Apple, Google, Meta, Amazon, you know, the Magnificent Seven stocks, AI chip stocks. About a month ago, those were all green and everything else is red. And now it's the other way around. And so what we're having again is another round of what we call rotation. So money is coming out of these highly bullish, profitable positions and into the rest of the market. Now, you can see it really clearly when you take a look at the market indices. This is a chart of the S&P 500. It's an ETF, which is a stock that tracks the S&P 500. And yesterday's action, after the day before the S&P 500 sets yet another all-time high, the S&P 500 came down hard. When I say hard, I mean volume below this 560 level. We do have support at 555. Looks like that might hold today. We'll take a look at the futures here in a minute. So the SPYs do have a lot of those big red stocks I mentioned before in that index. Now, another one that we look at is called the NASDAQ. And if you look at the Qs, the triple Qs, this is an ETF or stock that tracks the NASDAQ. And what was even more obvious here, because note that the NASDAQ has a heavy weighting in tech. So tech came down, the NASDAQ came down really hard. In fact, that was the worst drop the NASDAQ has experienced since 2022. So it's about a 2-year worst drop in 2 years on great conviction, lots of volume. All right, so where's this going from here? Well, it's either going to go down, sideways, or up. There you go. You're welcome. I think 480 might hold, but this volume and this severity of this move suggests that there might be some further downside in the NASDAQ, maybe down to 470. We might bounce off 480 and make another run up to 500. Again, all-time highs here was, what was that? Back there, it was about 506 or something, 502 or something like that. But point is, money's flowing out of tech. And you can see it flowing in to the Dow Jones Industrial Average when you look at this chart. This is the Dow, the diamonds, the ETF that tracks the 30 stocks meant to track and represent American industry. And you can see here a sea of green volume right there, all-time high, all-time high, all-time high on the diamonds, on the Dow stocks. You can even look at the small caps as well. This is the Russell 2000, and this thing as well. Yesterday, that was an all-time high, and all these here, all-time highs, a little bit of a pullback in the Russell. All right. So is the rotation going to continue? Well, we can take a quick look at the futures here. I went to CNBC.com, and you can see the Dow futures, which was up when everything else was down yesterday, are going to drop about a quarter percentage point at the open, and then the S&P 500 is going to bounce about 0.31%, and then the Nasdaq, pretty healthy bounce there. So we'll have to see if this bounce has staying power, but it's clear institutions are still bullish on the markets. They're rebalancing their portfolios to create a better distribution of risk across the various industry groups. All right. Now, do I care? Yeah, I care. Is it super important that we have a good feel about where the markets are going to snipe, to trade high probability short-term profits? Is it really critical? No, but sometimes it can help. It can help us fine-tune and maximize our probability of profit. Now, we've had a trade. We got one trade still on, and this is on Amazon. On 6/27, we set our line in the sand at 187.50, and then we bought the underlying put. That's a credit spread. We sold the credit spread for 35 cents times the 100 shares controlled is $35. We did it twice. We pulled in $70 of credit with a risk of 430 and a potential return on investment of 16% over a short-term period. All right, so this one actually came off on 7/8, on July the 8th. We took our trade off. The way we do this is once we're filled, we put an order in to buy the spread back for 10% of the original credit. So then I rounded that up to 4 cents, and you can see here we bought the spread back for 4 cents. All right, so we spent 11 cents. We sold the underlying put for 7 cents, a net debit of 4 cents. All right, so that was a winner. And the other one that is still in process is Delta. Delta came out with some bad earnings. The stock has recovered somewhat. Our line in the sand is right up here at 47. And you can see it in this picture called a risk graph. As long as the stock stays below this 47 line in the sand, which is roughly this line here, then we do nothing. We let the trade breathe. We let it do what it's going to do. And if the stock closes above 47, we take it off for a managed loss. Otherwise, we're sitting there with an order to buy the spread back for 2 cents, 1 cent, 2 cents, GTC. In the instant that happens, the trade can be bought back for a penny. We have a nabbed up profit on this trade. So it's rules-based, it's systems-based, and our performance, Ryan, I just did a report on our performance this year, and I routinely say, well, the sniper system generally over time normalizes to about a 10% profit. You can see this on the graphic here. So our APL, average profit per trade, is 10%, a little over, every 5 days. Normally that's 7 days. So we're operating better and we're turning our money faster. And the percentage of trades with a gain has been 87%. 31 trades done since we started tracking in January. So this is what the system does. And again, I've been doing this for 2 years live in front of groups, and this performance is I can't say it's a guarantee. It's not a guarantee, but it normalizes at 10% every 7 days with 90% wins. If you want some of that, this is what this show is about. Every Thursday, 9:15, Ryan and I get together and we take a look at the markets and we do live trades. All right, now, Ryan, I think before I go to today's trade candidate, I'd like to talk about the guidebook. All right, so we use credit spreads. All right, it's a very specific option strategy, and it's not a basic option strategy. It's a little bit more complex than basic. And so in order to help you come and join me on Thursdays at 9:15. I built this guidebook, and it takes you through the 5 steps. How do you identify good sniper candidates? How do you identify these lines in the sand that I continually talk about? How do you build a credit spread? What is a credit spread? How do you build a bullish credit spread? How do you build a bearish credit spread? And most importantly, how do you manage the trade once you are in? All right, so I do all of that every Thursday. And the idea here is grab this free guidebook and peruse it. It's very graphical. I think it's easy to read. And come join me every Thursday and snipe along with me. And perhaps the kind of performance that I routinely generate with this system, 10% every 7 days, can be a reality in your own accounts. All right, now let me show you the trade I have in mind for today. By the way, I'm using the Hub's charting software, which is really cool. If you'd like to know more about the software, you can go to hub.com and you can check this out. Okay, so the trade of the day today is on Discover Financial Services. Yeah, it's a credit card company. This is a chart as of yesterday. We've got 4 minutes, so we got plenty of time to get this thing staged up. And so what you can see here in the graphic is that Discover Financial Services is up 3.5% pre-market after posting better than expected second quarter results. And if you look at the results, they're really dramatic. All right, they posted a $6.06 EPS, earnings per share, on $4.54 billion in revenue. Now, this is why I think it's really good. That's good that they beat, right? But look how much they beat. So analysts polled by LSEG had forecasted not $6, but $3 per share in earnings, and not revenue of $4.54 billion, but $4.17 billion. All right, so that is a solid beat of earnings. And so for that reason, Discover Financial Services is now pre-market is up here somewhere. So the next phase then, the next step is to figure out where we want to put our line in the sand. And you know what line in the sand means. It's just a colloquial way to say support and resistance. But look, here's a beautiful resistance level right there, 130, round number, 130. Here, the stock danced on either side of 130. Here, resistance. Here, resistance. So if we could get any credit there, that's what I would like. All right, now, we might not be able to. And so I want to stay as far away from the heat. Now, look, if I could sell let me make it even simpler. If I could make money above 120, that trade there would have more probability than if I said I want to make money above 130. So where this line in the sand goes, the way you can loosely think about it is let's say 130 is the trade we'll end up getting on today. Once that's filled, then we want to make money anywhere above 130. All right, so stock rises, we make money. Stock goes sideways, we make money. Stock drops, we can still make money all the way down to our line in the sand. And so the probability is what high probability is in the name of the show, right? High probability short-term profits is all about the highest probability possible and still make 10%. So that's the game, and we're going to play it. So here's what I'd like to do. I'm going to try this out. I don't know if we're going to get enough credit. All right, so let me just take you to the spreadsheet. This is what I'm going to try to do. And I may have to lift up my credit spread, my line in the sand, but I'm going to try for this because this level here, oops, hold on a minute. I'm like Pavlov's dog. The market's open. Here's where Discover is. Okay? Now, if I can't get enough money here, 10% of the spread width, then I'm going to have to play the game of sliding this line in the sand up. So I'm going to start here at 130. And we're going to find out right now what we can get for this particular trade. We're going to sell a 130 put for August 2nd. That corresponds to line in the sand. We make money above 130 in this trade. And then I'm going to buy to open the lower put, same expiration, of course. And I'm going to try to get 10 cents. So let's go try to get 10 cents in a simulated environment. I'm in Thinkorswim. Does it? The type of broker is really irrelevant. And I'm going to try to get this trade. Now look, Discover Financial, that's exactly what I just showed you before. If you sell the 130 put for August 2nd, you buy the underlying for August 2nd, there's only 5 cents credit available. Now there's only 2. So as Discover starts rising and as the morning progresses, this credit will drop. So I don't see enough credit there. So then what I have to think about is, well, how close am I willing to go? Well, look at these pivot points here. This is how you can derive these lines in the sand. Look, right there, and that line is right at 134. Okay, so 134 is resistance there and then has become support. The stock is already up here. It could drop a little bit. We'll have to wait and see. But I think that is the next best support level. I can see Discover starting to drop a little bit. Now think about it. Why would Discover drop all the way down to 134 after blowing out their earnings? Could it happen? Yeah, it could happen. But why would the stock be priced less than it was yesterday with this good news? And then let's say it did drop to what the price was yesterday before the good news came out. Why would it drop even further all the way down to 134? Yes, it could. Anything can happen. Things do happen like that. But, we're just trying to maximize our probability of profit. Technically speaking, great setup. Even without the news, this would be a really good trade. With the news, with the good news, it's an even better trade. So I'm going to lift this up to 134. Let me show you what I'm doing exactly. So this is 134, 133, and I want to try to get at least 10 cents on a $1 spread. What does he mean by a $1 spread? A $1 spread is the distance. The $1 is calculated by subtracting the width of the spread. How do I say that? The distance between the strikes is $1, and we want to get at least 10% of that. And if we did that, then we'd have an 11% potential return on investment, which gets us down to 10 after we get out of the trade for a penny. So that's what I'm going to try to do. Let's go back to this particular trade here. And now what I'm going to do is go all the way up to 134, and then the underlying put at 133. And I only see 5 cents credit there. All right, so that's what we're dealing with. Do we want to go any closer? Let's take a look here. Where would I go? And by the way, I didn't mention this. This is all-time high territory for Discover. So we have to get closer. 140 is already support level. So 140 has a good chance of holding. So now I'm thinking about, well, that would protect me here if the stock started to make a bearish run. And then if I sold here, which is 137, then that would be as close as I would get. But let's try. Let's do this. Let's step this up a penny at a time, $1 at a time. I'm going to try for the 135, 134. So as I slide my credit spread up, there we go. That's the one. That's the one I'm going to go get. Let me show you exactly what this looks like. So we're going to do the 135. My phone is telling me to get up. 135, 134 put spread. I could type here 134 put spread for 10 cents. I'm going to do 5 of them. I need to get into this sucker right now. Now it's got 15 cents. That's even better. Let me take this down to 5 cents. Now look, the credit's starting to increase. Why? Well, Discover must be dropping a little bit. And so I'm going to pause for a sec. No, it's not. Good. Let's go get this. It's got 17 cents credit. I'm going to do 5 of them. So that order I just gave you, I'm going to go for 17 cents. Confirm and send. Let's see what happens here. So I'm just looking at the live working order. I'm asking for 17 cents and the mark price is 20. So this should fill. And one of the tricks you can do when you're trying to get filled on these is to just continually resubmit the order. And if you're trading this and you get filled in a simulated environment, you can let Ryan know, and we can talk about all of that. Now it's not filling, so what I'm going to do here is drop it to 15 cents. Slippage is pretty wide at the moment, which is normal at the market open. I'm going to try for 15 cents and see if we get it. All right, now it's at 25. So I think there's a slippage issue with this particular option. But if I could get 15 cents on this, that would be really great. Let me show you why I did 5. Okay, so all of this material that you're seeing is in the guidebook. So in this case, I want to calculate how many contracts should I do? If I can get 15 cents for this $1 trade, then that's $15. What's the risk though? How much risk do I have? And so these simple calculations help you determine what your max risk is in the trade, and then also what your potential return on investment is. Okay, so to determine this max risk number, you take the width of the spread, 1, and you subtract the credit, 15 if we get it, and then your max risk is 85 cents. If you divide the potential credit by the risk, the max risk in the trade, that's an 18% return on this trade if we get filled at 15 cents. All right, so when you sell this trade, you get $15 of credit with risk of $85. These numbers get multiplied by 100. All right, so you make 15 on 85. Well, what if I want to make more than $15? Well, you're going to have to add more risk. And so cardinal rule number 1 in trading is that you must not put too much of your money into any given trade. Industry standard is 2 to 3%. Some stretch that to 5%. So for example here, if I had a $25,000 account, I don't want to put $12,500 of that money into one trade. I only want to put 2% of that into one trade. So 2% of 25,000 is 500. And so that's my max risk. The benefit of that to your psychology is unmistakable. Insulate, isolate, be able to take a max loss, because those happen from time to time in all trading systems. You'll get a max loss sometimes. And though if you do get a max loss, you've only blown away 2% of your entire portfolio. So it creates some freedom and allows you to practice proper money management. So in this case, if I did 5 contracts and the risk per contract is $85, then my max risk is $425. So I did 5 contracts. 5 contracts times 15 cents is $75 on $425 of risk. Okay, that's math. Sorry about that. It's in the guide. It's easy once you do it a few times. And fortunately, you can do this with me every Thursday. All right, now I'm going back to the Discover trade. Looks like it's down to 5 cents. Am I willing to go any higher than 135 on this one? Let's go take a look at this live stock chart on the Hub platform. And it seems to want to maybe continue its rise. I'm reluctant to go any higher, so I'm not. I'd say 140 would be reasonable. It is a support level now, but I want a bit more probability. So I'm going to hold my guns and I'm going to let this sit. Currently, the spread's worth 5 cents. Now, what I will do is drop this price to 10. So I'm going to cancel replace this order. 10 cents is my minimum. That's 10% of $1, the spread width. And I'll confirm and send that. And so let's not get greedy. Let's get our 10 cents. And it's at 7.5 cents currently. Now, the way this will fill, the only way this is going to fill, is if Discover during the morning or the whole day, in fact, leave this on for the day, Discover if it dips a little bit. It's bouncing around here. Let's zoom in a little bit. It's dancing around. It's been as high as here, and it's been as low as there, and it's sort of vacillating. So if it drops just a little bit, this 135 put spread here, 135 right there, that 135 put spread will fill. So look, the stock's starting to drop. All right, so what's happening to the credit? As the stock drops, this credit will increase, and then we can nab this trade, letting the trade come to us. That's my price. Give it to me or not. I'm not chasing any higher than 135. So we may not get filled on this. I think we will, but we may not. So Ryan, are there any other stocks our audience members would like me to look at?
Tony says that he filled Discovery 134, 133 put for 10 cents. And that's for 11% ROI.
There you go, Tone.
San Diego, Tony's. Sorry, go ahead.
No, I was going to say San Diego. I know Tony. He's a good friend of mine. San Diego Tony's in the house. That's a good fill, man.
Gotcha. Oh, yeah.
Yeah.
Then BC says, I'm looking at DPZ for a call credit spread.
Domino's. Yeah, I was looking at this one too this morning. Domino's Pizza. Here's the chart. When I saw it this morning, I thought there was going to be a bounce, and I'm going to tell you why. All right, so here, what's compelling technically about this is Domino's was here yesterday, announced earnings this morning, and the stock tanked. And it tanked all the way down to, let's get my crosshairs on here. So it tanked all the way down to here, and then it bounced. So that's about 410. It bounced right off 410 and is starting to make a run. Let's check the news, though. So, technically, you wouldn't even need to check the news. You still have a good shot of making money on this trade anywhere above this 200-day average. It's going to take a lot for the stock to get back up above the 200-day average. It could happen, but that is a rock solid. This blue line is the 200-day average. It's a rock solid resistance level. Indeed, you can see Domino's is approaching that level. So that should hold, but maybe not. So technically speaking, good shot, high probability the stock will stay below this 200-day average. And so with that said, what we could do is sell a trade right there, make money below 450. But with the stock rising so hard, I'm like, I don't know. Weird things happen. So what's the news? You can find the news in many places. I'm going to go ahead and go into Yahoo Finance. It's finance.yahoo.com, finance.yahoo.com. And we can take a look and see what the earnings were. Now, see, the earnings are mixed here. Domino's Pizza Q2 earnings surpass estimates. That's why I thought it would bounce. Domino's Pizza continues to grow sales as peers struggle. The stock slumps.
I was going to say a lot of stuff that I'm seeing on Domino's, it's talking about like their peers. Like Papa John's is really slouching a lot. And then like Pizza Hut is just not great. So I think that might be affect just the all their peers of being affected might affect them.
Yeah, yeah, man. Do you like Domino's or Pizza Hut better?
Domino's, absolutely, not even
Yeah, me
close.
too. I love Domino's. In where I'm at in Costa Rica, there's no Domino's in the jungle. So I'm going back to Texas next week to see my mother, and we'll be getting some Domino's. I love Domino's.
Nice. Yeah, a lot of what about what makes Domino's different is their tech. Like they were the first to do the tracking their drivers, that kind of stuff, all their GPS tech, which is one thing that's really cool about Domino's, and one reason I really like Domino's.
You know where the guy's at or
Yeah.
girl? Yeah. All right. Well, thank you for this suggestion, and I'm going to get some Domino's pizza when I get back to the States next week. Now, here's where the negative news comes in, though. Domino's Pizza trims store openings target. So the amount of stores that they're opening globally is starting to come down. So they've lowered their store growth rate. They missed on sales. So that's bad news. This is good news. So the news is mixed. And because the news is mixed, because I've been doing this forever now, I was quite confident there'd be a bounce. So given the news is mixed, we could see a recovery. So if I could sell up here, especially since the stock is making a strong run, it could make its way back up. So what about 475? And as you do this, you're like, all right, if I sell here and I want to make money below this line and the stock continues this bullish bounce, breaks above the 200-day average, breaks above 450, then we could lose money on this. So because of mixed, I'm going to try for 475. And that is a strong support level here and here. And that's my line. So I'm going to do this is the only trade I would do on this one. And let me build it for you. Let's go into a live environment here. Domino's Pizza. DPZ is the symbol. And then this is a live option chain. And there's so much I could teach you here. I'm just going to go right into 2-week options. Hey, Ryan, my birthday's on August the 2nd, man. Another one. Another one's here. All right. So again, my line in the sand is at 475. All right. That's where I want to make. Anywhere below that point, I want to make some money. Now, I go to the option chain and I'll find that trade. And let's see what they're pricing it at. This has a shot. All right. So this is a 5-point spread. 5 points. I'm going to do one of these. Selling the 475 call, buying the 480 call. The minimum credit I would want for that, or I would accept for that, is 10% of the spread width. The spread width is 5. 10% of 5 is 50 cents. And what is crazy is that they're giving us $1.22. However, the slippage is a little wide. So we have a good shot of getting 50 cents there on a 15-day trade. But what if I wanted to be in for less time and make my money faster? I could try for the week before, and look at that. That's what I want to do. This is a shorter term trade. This trade expires a week from Friday. Here's the trade. Let me type it for you here so everybody's on the same page. Okay, so this is DPZ as the symbol. And then we want the July 26s. That is correct. And now we want calls, not puts. This is a bearish trade. Using calls, weird, but that's how it works. Selling the 475, buying the 480. So selling the 475 and then buying the 480. And I want to get at least 10 cents for that. No, I'm sorry, 50 cents. Looks like we can get more than that, but we want at least 50 cents on this. And now I'm seeing the credit has dried up a little bit. Now, had I not been yapping, we might have had a shot at getting that. All right, so it's not there. So now I'm going to go sell some more time. There we go. Well, even that's a little bit light. Let's do it this way. When I'm doing these live, you got to kind of move fast because if you move faster, the credits dry up throughout the morning. They're the highest at 9:30, and then they start dropping as implied volatility comes out of the trade. So I'm going to put this in for 50 cents. Okay, I'm going to do one of them. Selling the August 2 475 call, buying the August 2 480 call. Ask for 50 cents. It's only showing 37 currently, but ask for 50 cents and let it sit. We got two going now. We got Discover and Domino's. We got our credits, our minimum credits. We have a good shot of getting filled on both. We'll have to wait and see what happens. So let's just let those sit for the day. If they don't fill today, you could always go back at them again tomorrow. All right, Ryan, are you going to be here next week?
I sure will. I will be here.
I love it, man. It's good to have you back.
Good to be back.
Yeah, man. When did you come back from vacation?
I got back Sunday, I believe. Sorry about the background noise there.
Yeah, no problem, man. Yeah, so this is your first week back. How's it going so far?
Oh, it's good. It's going real good.
Right on. All right, everybody, that's a wrap for today. Have a great weekend. We'll see you next week at the same time, 9:15 on Thursday. Get that free guidebook. It's down below. Please grab it, take a quick read of it, and come and snipe with me next Thursday at 9:15. Have a great weekend, everybody. Pura vida.